Hey gang, welcome to another episode of Value Added, the real estate podcast. On this week's episode, we're chatting with Rick Martin. Rick is the founder of Fortress Federation Investments, a Los Angeles-based investment firm. Rick is also in the entertainment industry. His real estate holdings have taken him through various markets like Las Vegas, California, Indianapolis, Columbus, Ohio, Jacksonville, Florida, Texas, to name a few. So without further ado, let's get on with the show.
Welcome to Value Added, the real estate podcast where we speak with the brightest minds in the world of real estate who provide, create, and realize value in an ever-changing market. And now your host, Nick Walters.
I got out for a surf this morning, which is always a good way to start the day, get my mindset right.
You know, the coolest, I never lived out west before, but, and when we're live, by the way, I like the pre-interview banter, but I think LA, Southern California is one of the coolest places where you can be surfing in the morning and then hit the slopes, in the afternoon. You go out to like Mammoth Mountain or, isn't that cool?
That's what they say. I've yet to do that. I do like to snowboard as well. And Mammoth, that would be a stretch because that's about a 5-hour drive from here.
Okay, I thought it was closer. That's
definitely the place to go. The marquee place. All we have around here is Big Bear, and
that's right.
There's a place called Mount Baldy, which is actually really good, but it needs a lot of snow, and we don't get a lot of precipitation here in Southern California. We get a lot of fires, not a lot of rain, unfortunately.
Gotcha.
But you can do it. It could be done.
Yeah. Well, I appreciate you coming on. This is awesome. I've been wanting to get you on for a little while.
Good.
And, we're obviously, we know one another through Michael Blanc's mastermind group. And you're also pretty active you have been lately in markets that I've been looking at, specifically in the Carolinas, right?
Yeah, that's where I've been looking lately. Active, it's a matter of definition, definitely been attempting and finally getting some traction now. And it's tricky, it's tricky being from California and trying to learn all these different markets. I mean, by the end of it, I want to just settle in on one, maybe two markets. Because it's a lot to vet every market and to try to establish a team in every market. It's a little bit too much. But it's just a progression in this business. There's a lot of hats to wear, right? And it takes patience as well as fortitude,
Mm-hmm. Before we we're going to dig into multifamily and your involvement both as a passive investor and also a GP, an active investor. But I want to go back I want you to tell the listeners a little bit more about your background. You haven't invested in real estate your entire life. You came up in the entertainment industry, correct? Tell us a little bit about your career leading up to this point.
Yeah, well, actually, I have been investing in real estate for quite a while. Maybe a lot of people don't know that. On the multifamily stage, no. Small multifamily, maybe. But my background's a little different, I would say. I went to college. I graduated from the UW, and I remember sitting in an interview with, I think it was Procter & Gamble. And I wasn't even listening to the lady. I was like, I knew right then and there, this does not feel comfortable. This isn't me. I always had a background in music, growing up through high school. My parents didn't like it, but all my brothers, they were musicians and they passed that down to me. And I always had that scratch to itch. Is that how you say it? And I also had never traveled anywhere. So, and my dad, man, he wanted, I'm sure he was hoping I was going to go out there and get the corporate job, but I had to sit down with him and I said, you know what, Dad, this is the only time that I can travel. So I actually did a trip around the world, or more like the Pacific Rim. So I went to Southeast Asia, Australia, New Zealand, Polynesia, and I think it really taught me a lot. Like walking into a country and not knowing a language or not even being able to read the characters on a sign, it can teach you how to think on your feet. And I was alone. I was a pretty young man roaming around the world. And actually, my dad was cool with it. He got involved. He was writing me postcards, which is what you did back then. There was no email. But it taught me a lot, and I came back, and I had this dream where I wanted to be a musician, and I pursued it. And all the while I was, I had my day jobs, and I was actually pretty thrifty with my money, so I was saving money, and decided to buy a house. This was in Seattle, Washington, and I was actually going to go in on it with my then girlfriend, and then we kind of split. And I was like, well, you know what? I'm going to buy a house anyway. So I did. And I lived in it for a while, and I actually rented out a room. So I didn't know it, but I was doing a little bit of house hacking. I was getting help on that mortgage. And then the music thing, I was like, okay, I'm tired of being a starving artist. I went off to a film school up in Vancouver, British Columbia, and put that house up for rent. And then I was really like, oh, okay, this is nice, because I was a broke student, but I was getting this income. And that's definitely when the light bulb went off. And I figured at that time, okay, I'm going to buy a house every year, and I'm going to retire off all that real estate that I'm going to own. And then, I was a student, didn't have a lot of money, so that plan kind of got shelved. But I did end up buying a place in Vegas, which is pretty comical because I knew nothing about, like, the 1% rule, for instance. I didn't know how much rent you had to collect to break even. I just thought that asset's going to appreciate, and I'm going to just keep on getting all this appreciation. And then 2008 hit, and that house in particular really sank to the bottom. But I held on to that thing, and I actually sold it for a little bit of a profit.
When you say 1% rule, we're talking 1% of the purchase price, rent to purchase price ratio, correct?
You got it.
That's a pretty easy back of the napkin, valuation to make if an income producing property is going to pencil out, correct?
Yeah, it gives you an idea, like, okay, maybe there's enough margin here, and these numbers will make sense. Although I don't really look at anything below 1.5% rule now, and I do the same thing on multifamily. I'll break it down per unit, and I'll see what kind of rent we're collecting on each unit, and compare that to the price per unit. Some people do cost per unit, but it'll give me an idea, like, okay, it's worth taking a deep dive, because underwriting can take a day. You don't really want to waste a bunch of time on a property that's not going to be worth anything. And
it also is going to be market specific. Getting a 1% or 1.5% rule in LA or New York is going to be a lot more difficult than in a very good cash flowing market like Kansas City or a Memphis, right?
Yeah, it's probably going to be impossible.
Right, exactly. It's probably going to be more in the 2 or 2.5% rule. But
yeah, I should clarify. Yeah, a cash flow market is probably one of the first criteria that I put out there. Like, is there a possibility to cash flow? And that's why I'm looking in the Southeast, and I still look a little bit in the Midwest, like Columbus and whatnot.
So let's talk about, I really wanted to have you on. You have such an interesting work background, and as it has kind of led into your real estate investing world, but you really cut your teeth on the passive side of the business, deploying your earnings from your various W-2 jobs over the years, and then investing that disposable income into sponsors of income producing real estate, to grow your money. Talk to me a little bit about how that came about, and where your passive investments have taken you over the last several years since you started investing.
Yeah, sure. Well, I was making the transition from single family into multifamily. I was learning about multifamily, which I suggest to anyone to do. Break out a good book or two, listen to some podcasts, get educated. And that's what I was doing. And I thought, I'm going to buy an apartment. I'm going to sell these houses. I'm going to take my savings from my job, and I'm going to buy an apartment. And it's not that easy. It takes a while. So I was I was, on the one hand, I was sort of losing patience, and I wanted to get in, and I started meeting sponsors, and I started vetting sponsors. And like you say, yeah, I started to investing passively. I thought, well, this sounds pretty good. Getting double-digit returns, and I really love the cash flow element. That's different from stocks. You can put money in a stock and you may never touch it before it caves. Whereas with the passive income, what I was liking was just seeing my bank account grow, being able to use that if I want, and then knowing that through operational efficiencies and through upgrading the units, we're forcing some appreciation. We're not waiting for the market appreciation, the whims of the market. No, we're forcing that appreciation. So I love that combination. And I feel like at the same time, it's given me a little bit of a peek behind the curtain. I decided to not just go with one operator or two operators. I literally invested with, I think I'm up to 5 operators now, and they all do it a little differently. And it's given me some perspective, give me a little education on being on this side of the fence. I prefer what some do in some cases over the others. And it's great. What I guess I should just say what I appreciate the most is that now I'm actually building up enough cash flow to give me a little bit of peace of mind where I can kind of take a step back. I work on a consulting basis, so I can kind of pick and choose what jobs I do for my day job. And this allows me to be a little more careful on what I take. I got that money coming in, and that's the best part.
So you've invested in 1,100 units around the country in various markets as a passive investor. Why now take the dive into looking at deals as a general partner or a sponsor? I'm sure that those 1,100 units that you've invested in and not having to actively manage these assets has reaped some good returns over the years. So why your transition? Maybe not a full transition, but deploying more capital into the general partner slug of these deals.
For me, I enjoy real estate. And I've kind of seen a way where I can kind of bridge my old career into my new career as a real estate investor. And so I enjoy the game. It's like Monopoly, it's fun. It's fun for me. It's not fun for everybody. There are a lot of people that are just busy professionals. They want to get that steady income. Probably I would say the majority of people are like that, right? But I think that's pretty much it in a nutshell. I enjoy it, but I'm not going to stop passively investing either. I'm considering deals right now. I kind of like the hybrid approach. You don't have to. You could be 100% passive if you want. You could be 100% active. You could be a little of both. I'm just being a little hybrid right now.
Yeah, I mean, a few weeks ago, I had George Abreu on the show, and he's got about, I would say, 50-50 passive and units under management on both passive and the active side. And I think it's a really good way to diversify your investments, market specific. Maybe you're passively investing in other markets that you don't really have that intimate knowledge of. Maybe you're investing more in the jockey than the horse, so to speak. You're investing in sponsors that you have invested with in the past and you trust. And maybe because I know with George, he's focused on his active role is his assets in his backyard in Texas.
Right.
Which
he knows.
Exactly. And he knows it very intimately. And your passive portfolio are in markets in far-flung states from Los Angeles. You're looking at Las Vegas. You do have some assets, locally in LA, Desert Hot Springs, California, Indianapolis, Columbus, Ohio, Jacksonville, Florida, Longview, Texas. That's East Texas. Wow. The DFW area.
Exactly. You hit the nail on the head.
Right. And But you're also looking at active roles in these markets as well. So you must have some boots on the ground and some relationships. Tell us a little bit about what you're digging into there on the active side.
Yeah, well, before I touch on that, you hit the nail on the head. With passive investing, I can leverage people all around the country, leverage their knowledge of that market. And I could never begin to know all the details of every market like these people do. And so that is first and foremost. And now you got to do your homework. I would hope that people can look under the hood a little bit. I think you should learn a little bit about underwriting. You don't want to take every deal on surface level. Just what's stated in the investment summary. You got to check that. You got to check that out. You should learn a little bit of stuff about vetting a market. Seeing what the median income is in that market, seeing what the population growth is doing, what jobs are going there, and then be able to kind of work the numbers. Know when you see something that's over projected in terms of rent growth. The key levers like the exit cap. Everybody needs to know a little bit about that stuff, just to make sure they are getting into a good deal. But I think once you establish a trust with an operator, you see how they underwrite, you can kind of, you can put a little more faith and trust in them. To answer your active question, I would, same thing. I'm not going to be able to be all around the country. So I'm zeroing in on a particular region. And right now that happens to be the Southeast. And yes, I'm establishing partnerships in those regions where they can take care of the acquisition and the asset management, and I can help out with the due diligence and raising of the equity and doing what I do, which is I create a lot of content and educate people.
I want to touch on the content production here in a second, because lately, especially, you've been putting out a lot of great content with educating the passive investors on, why an investment into commercial income producing real estate is very desirable from many angles. But in terms of your relationships that you've been building with these potential partners, operators that do have an intimate knowledge of these markets that you're looking at, how have you been able to build those relationships, since meeting these folks?
I think the best way, unfortunately, we can't do this right now, but I've had the best luck going into conferences and just getting that rapport. You know who you identify, who you resonate with when you meet them in person. So that got me off to a great jumping point. Having said that, this whole remote thing is pretty cool. They have these breakout rooms. As long as it's not speed dating, which a lot of them are, you can kind of get a sense of the kind of person you want to partner with pretty quickly. Just what kind of command do they have over the language, what they're saying about their market? Are they in a market that you're interested in? For instance, I'm interested in Chattanooga, Tennessee. I've yet to meet anyone who lives in Chattanooga, Tennessee. I know some people who know a thing or two about it. But if someone tells me they're in a particular market, of course, I'm going to be attentive. And I have learned how to be a little more intentional than I was in the beginning. I'd go to a conference and I just kind of be a wallflower and just kind of wander around. And, you get into conversations, immediately like, well, we really can't help each other out, but how do you get out of that conversation without insulting someone? But the more you're in this business, the more you learn about it, the more you know what you want. And the more you realize what you need and how you can help them and how they can help you, how you can fit together, how you can be complementary to one another.
Over the years, how have you built your Rolodex of potential investors who may be limited partners into the deals that you're sponsoring?
Yeah, that's an ever evolving process. Of course, I start with the friends and family. Which is good and bad. It's good in that they know, like, and trust you right off the bat. But but then again, you're working against your old self, in your past life. Like I told you, I was a musician back in the day, so some of my younger friends are like, hey, come on, man, you're just like a guitar player. Why am I going to put my money with you? But a lot of them understand that I've been investing in real estate for years, and I understand it. Once they talk to me, they're like, oh, okay, all right, Rick knows what he's doing. And then in terms of getting new people involved, it took me a while to actually put like-minded investors on my list. You never know. Like I actually kind of looked at myself like, hey, I'm an active real estate investor, but I want to passively invest. There's probably a lot of people like me out there that have money that they want to deploy. You can't take your own retirement money and invest it in your own syndication, so you got to do something with it. So I've been more proactive in terms of, hey, would you mind if I put you on my list? At the very least, you can keep along with my blog and my videos and see what I'm up to, how I go about doing my business. And that helps grow my list a little bit. And then other than that, sometimes people will read something I've written and it resonates with them and they'll sign up. I have a ebook on my website that really condenses the world of investing in a syndication down nicely. I call it the Quick Start Guide, the comprehensive Quick Start Guide. And, people can input their email and download that. And that kind of takes out that overwhelming sense, like, where do I begin? Because it really does condense it down nicely into 20, 25 pages. Plus, there are a lot of hot links in there that take you to other articles and videos. And by the end of that, an investor should feel pretty comfortable about what they're doing.
How long has it been since you realized that you could really leverage social media and digital marketing in educating folks on why commercial real estate investing is such a great vehicle?
It's an ongoing process. You can put a message out on Facebook about, hey, look at my cat, it's running up that tree, and you'll get like 80 likes, ton of comments. And then you'll put something up about real estate. It's like crickets, it really kind of depends on where you're catching people. Facebook is a very instant gratification kind of platform. People are they're scrolling through that thing and oh, wait, I got to read that? No, that's not worth my time. Hey, look at this cat. That's the kind of world it is. So you have to be patient, and you just got to stick with it. And you have to authentically engage with people. You're not going up there to take them as your prey. You're going over there you really need to go in with the attitude that you're adding value, and you want to answer questions, whether it be on LinkedIn or Facebook or Bigger Pockets. I get a charge out of helping someone out, and they say, hey, I like what you said there. It's a good feeling.
When you get a potential investor on the phone and you're listening to what their expectations are, or if they have any experience investing as a limited partner, what kind of questions are you asking, and what are you hearing from them with regards to what their expectations are?
Yeah, I try to start with I do my best to identify their pain points if they have them. You, like us, you want to start with what's your why? Why are you looking to invest? How come you reached out to me? And as the conversation progresses, hopefully they might share a little something, like maybe I'm trying to add to my retirement, or I'm trying to get some income streams to pay for my kids' college. It doesn't always go that way. Sometimes I have to lead the conversation. I say, well, what are you more interested in? Are you interested in more cash flow? You want something more stable, or are you interested in a little upside, maybe something distressed, or at least value add? And they usually are a little more mostly interested in value add, where they can get a little bit of cash flow and a little bit of appreciation, which is good, because that's pretty much my that's the way I go about doing my business.
Mm-hmm. Yeah, I've noticed that it's very important to vet those potential investors. You may have some investors that have a little bit higher risk tolerance where they want to do, they want to be involved in ground up development and they want a 20 or a 30% IRR, and they're not going to get those returns if you're a value add investor in Class B and Class C assets in the Southeast, especially in this market. Maybe you were able to reap 16, 18, 20% IRRs 5 years ago, but cap rates have compressed and those IRRs are in the low teens, 12, 13%. So it's very important to match the investors to what your thesis is, right?
Absolutely. And you get varying levels of education. You'll get people who have invested a lot, but they've never invested in real estate, or they've invested in real estate, but they've never invested in a syndication. Or you'll get someone who's very green and maybe they have a total of $50,000 saved up. And, you just tell them, I don't think you want to put all your eggs in one basket. Although I truly believe that multifamily is really diversifying your risk. I'm not going to have someone who's not financially qualified. But I tell them, hey, keep up with the blog, stick with me. And maybe I give them some advice on where they could put that money, although I'm not a financial advisor. And then you'll get the people who are highly educated in the space, and they like to drag you through the coals and ask you all these different kinds of questions, which is I enjoy. It's kind of a challenge, and I love talking real estate, and I think they get that sense. They like talking real estate, and we have a good conversation.
I think any sponsor should be prepared to have that very discerning, maybe a very experienced investor on the other line. You should be prepared to answer those questions. And if you're not, it's going to be very hard to fill up that required equity to take down a deal. Last thing I want to ask you before we get into the hard hitting questions is, in terms of your criteria for things that you're looking at in the Southeast, give us a little idea as to what your mandate is, what's your criteria?
Looking at B and C class, always looking for 100 plus units. I like garden style, pitched roofs. I want there to be something sort of unique about the property. And I want something unique about the market. Like, what's the buzz about that local market? What's going on? Is there some company moving in that's going to invest a lot of money in that market that you find that out? How's the workforce housing supply? Is there a shortage? Is that a problem? If that's a problem, that's great for you. Those sorts of things.
Rick, we're going to conclude this episode with the hard-hitting questions. These are the questions that we ask every one of our listeners. We were talking about your investors' why and why they want to invest. I'm going to ask you, what is your why with what you do for a living?
Well, it's definitely now my family, my kids. It's pretty easy. Earlier in my life, like I said, when I was a musician, I was pretty much, it was all about me. And I don't think I would have had that. I didn't have that strong enough why. I'm doing work out here in Redondo Beach, and sometimes I'm required to travel into Hollywood, and that'll eat up like 10 or 11 hours of your day. And that just can't happen anymore, or it just couldn't happen. It's a pretty heartbreaking when you see your young little boy, looking at you every day, if you're lucky enough to catch them before they wake up. Some days you come home, you haven't seen them all day. So that just can't happen. That's my why. I love them. I love my wife. I love my kids. I'm very happy, and I want to spend more time with them.
Is there a recent book that you've read, or a blog or a podcast that has provided significant value to your life or your career recently? Yeah. A couple. I think for your audience, I'll give Rob Beardsley a plug. Like I was alluding to earlier,
it's really important, whether you're active or passive, to really know underwriting, and not only know one underwriting model, but maybe several. So I've been pushing myself to learn more underwriting models. And he wrote a book, The Definitive Guide to Underwriting by Rob Beardsley. He's with Lone Star Capital. And it's great. If you want to just read it from page to page, you could get through it. But since it's underwriting, I like to stop and check each line item that he's talking about and really understand the concepts. But for those of you who want to learn more about underwriting, I think that's a great place to go. And also, I think James Ng of Old Capital puts out a fairly simple, straightforward underwriting tool.
Great recommendations. Besides your alarm clock, what gets you out of bed every morning?
Coffee, pretty much coffee. That's fairly true. But for me, I do like to get my time for me out of the way before my kids get up. So it's necessary, whether it be I'm studying something, learning something new, working on my business, moving the needle forward, or whether I go out for a surf like I did this morning, which it's always great for my state of mind. I got to get up early. I'm not naturally an early riser. I love the book. What is it? Miracle Morning. I always get it confused.
Yeah, by Hal Elrod. I've read it. It's a great book.
It's it's top 3 mindset books for me. But I'm not a natural morning person. So, but yeah, just knowing that I want to get what I need out of life. I'm going to need those few hours to myself before the kids wake up and throw it all to shambles.
How do you like to pay it forward, Rick?
How do I like to give back?
Give back, pay it forward. Yeah.
In terms of this space, I definitely give out a lot of free content.
Yes, you do. I know that well.
I spend a ton of time sharing what I know, and whether it's writing, you can bang that out fairly quickly, but producing videos, that's a whole nother story. And I don't ask for anything in return. So I do try to help others, and, I'll go on BiggerPockets, and sometimes some younger investors will reach out to me, and I try to give them what knowledge I can, and it feels good.
Yeah. Everybody should check out Rick's website. It's fortressfederation.com. Is that correct?
You got it. Thanks for reminding me. That's good. You plugged that.
Gotta plug it.
Yeah, absolutely. Like I said earlier, it's a free resource on there. It's an ebook that you can get that kind of condenses the world of syndication down nicely. So I encourage you to get that. And yeah, I got a ton of video content up there that my YouTube channel is pretty new. But it's something I've been, thinking about and wanting to do for the longest time. And you'll find a lot of blogs up there, and you can always reach out to me at rick@fortressfederation.com. Happy to chat.
That's great. Rick, knowing what you know now, what's the best piece of advice you would give your 21, 22-year-old college graduate self?
Okay. That's a great question. Well, I know that I wasn't very mature back then, but I would have attempted to hand him Rich Dad, Poor Dad and say, you need to read this and you need to pay attention and really understand what the guy's writing here. There's a few key morsels that I want you to pull from that. One is put your money in assets, not liabilities. Buying your home is a liability, believe it or not. And I think there's something that they say in there. What is it? Instead of saying, I can't afford this, how can I afford this? Mm-hmm. But I'm not sure how that would go. I'm trying to get one of my boys to learn piano, and it's like, oh my God, it's like pulling teeth, and I try to explain to him, this is good for you. You're going to appreciate this. Or he's learning, he knows Portuguese, he learns English and Portuguese. And I'm saying, you know a whole nother language, and he just doesn't appreciate it, right? So I'm not sure, but that's what I've tried to do with my 21-year-old self. It's like, read Rich Dad, Poor Dad and understand it.
I like it. Great piece of advice. My parents gave me Rich Dad, Poor Dad back in 2002 when I was graduating from college. And it took me several years to grasp the idea. But once you do, it's It's the best way of looking at your income potential.
Absolutely. It's a mind shift, right? It really is. And believe it or not, I only read that book like, I don't know, 4 or 5 years ago. That's why I feel like, man, I wish I read this book back when I was, look at, what's his name? David Tupin. You know who David Tupin is?
I don't know.
He's in the space, and I swear the guy started syndicating when he was like 5 years old. I mean, are you kidding me? I'm exaggerating, but it's incredible how some of these young people, they're getting it early. I guess it's because the internet and social media and the world, the word is circulating. But yeah, it's incredible. Yeah, I wish I read Rich Dad Poor Dad when I was at least 21.
Yeah, I hear you. So you mentioned your email a second ago. How else can our listeners get a hold of you or learn a little bit more about you and Fortress Federation?
Yeah, well, definitely go to the website, number one. And if not there, you can find Fortress Federation on LinkedIn, and you can find Fortress Federation on Facebook as well. Those are probably the two platforms that I'm utilizing the most.
Awesome. Great stuff, Rick. Hey, listen, so grateful for the time. Thanks for coming on with us and adding your value today. We really appreciate it.
Oh, man, total privilege. And may I say, man, you missed your calling. You should have been a TV, man. You got the voice for it. Look at your.
Do you like my bruise here? Look at my forehead. I ran into a bookshelf the other night. That looks really good on camera, doesn't it?
Did you really run into a bookshelf? Is that really what happened?
I swear. I mean, I wish I could say my 2-year-old hit me in the forehead with a car, but I don't have a cooler story than that.
Well, yeah. We can take that out and post for you. I'm out here in Hollywood. We can do some special effects and get that forehead looking good for you.
I like it. I did not have time for hair and makeup today, so I had to just grin and bear it. My war wound.
You look tough, man.
All right, man. Hey, again, thanks for the time. Thanks so much for joining us.
My pleasure. Thanks for having me, Nick. Real pleasure.
Thanks for listening. If you enjoyed this episode, please make sure to leave a rating and a review, which will help us introduce the podcast to other listeners. Also, don't forget to subscribe to our YouTube channel, which will give you access to other episodes you may have missed. Lastly, if you'd like to learn more about investing alongside us, then head on over to valueaddedpodcast.com. Have a great day, and we'll talk to you next week.